In this video, I'll share with you the two biggest mistakes I see people make when they trade using the Binance Volume Monitor. Now, the link to this tool and another tool to use with it is down below in the description, and also the original video. So this video of me trading with this Binance Volume Monitor is one of the most popular videos I've done. So the link to that video as well, so if you're just new and you haven't seen it. And one thing I'll mention is that I've really advanced on how I trade with this here. And that video is good, but I'll be doing an updated video. So let's get into the two tips. So the first tip is that it's important to realize that these numbers are relative. And also be mindful of low volume charts. So those are the actual two tips here. Actually, I'll give a third tip as well. And this is a general tip in trading in general. When you see something pop up here, if it only pops up once, okay, it does not mean enter that trade. Any signal that you see in trading is just an alert for you to pay attention. All right, if you just remember that general thing on your entries, which really isn't the most important part of trading, but on your entries actually, you'll be a lot better. Okay, so this Binance Volume Monitor is an alert to say, hey, pay attention to this. It does not mean enter the trade right away. All right, it means pay attention and look for confirmation. So anytime that you get alerted to anything on a chart, using a monitor, using another indicator, all it means is pay attention and look for confirmation. And a good example of this is Storm. It showed up here, but it's no longer here. Now, if we actually go to the Storm chart here, and this is Bitcoin, let's go to Storm. You'll see here, let me remove these positions for something I was doing before. So yesterday, Storm pumped like crazy. I scalped this. I don't know how many times I scalped Storm, but anywhere from 5 to 18, 19%, multiple times, probably 15, 16 times throughout the day. And I'm anticipating that maybe the Asian market will wake up on their Sunday here and actually get excited about this again, okay? But this popped up here, and this actually probably isn't the best example because it's actually turning out pretty good. But the monitor actually popped up here. See this spike in volume? All right. And the thing to keep in mind on Ncash here, if we look at this, these numbers are relative and they're lagging. Okay. They're relative and they're lagging, and they're relative to the recent history of that chart and that asset. All right. So when you look at this, and for people that are in my training, you'll get this like 100%. And unfortunately, I can't go into full detail about why this is really important, but just here's the high-level overview of why this is really important, okay? Volume has to match price action. And when volume matches price action on one candle, you have to look at a following confirmation on all other price action thereafter, all right? So this here does show stopping volume. We're on the 3-minute chart, so keep in mind this is 3 minutes. When we actually go to the 15-minute, for instance, this looks a little bit different, right? But you'll see there's stopping volume, there's stopping price action here, and actually from that stopping price action it moved up, right? Now the true question here is whether or not this stopping price action here is enough to create a foundation of people interested in this asset in a long position to not exit it as it comes down here and crosses this range, if it does, okay? And whether or not new support steps in, right? I'm mentioning that because, once again, these numbers that you see here are relative, all right? Let's look at Ncash, and let's just, because it popped up, okay? This number, 27%, 28%, 27%, these are all relative numbers to the recent net volume. Okay, so here's a prime example on Ncash. I've seen a lot of people, they would look at this and say, okay, well, look at this. Look at all the buyers lined up, all right? Look at, there's no sellers over here. And if you look at the depth chart, wow, look at that. Now, of course, the more you go in, the more impressive it looks, right? As you scroll out, it still looks okay, right? But that's meaningless. This is all meaningless. But using this volume monitor, I've seen a lot of people actually go in there and actually enter a trade right away, okay? And the challenge there, and the end cash is actually a better than storm. So let's look at end cash here. Is we're on the 3-minute chart here, and let's say you entered as soon as you saw that. And what we're seeing right now is that here is where that volume monitor popped up, okay? And we're waiting for confirmation right now, all right? We didn't enter the trade yet. I need confirmation. I need confirmation that this volume isn't just a one-off thing. And keep in mind, it's relative to the recent volume. All right, if we look at this chart overall and we go to the 15-minute, the volume is a little bit of a spike up, right? And there's the average line there. But we want to see something more like this volume right here. That's what we want to see. This is relative. This could be a short-lived run-up, right? Now you could enter a position here. And this is where there's another tool that I link below for using trailing stop losses. But you could enter a position here and probably put in a 3% stop loss and look to ride that upside. I think that might be an okay position to enter, right? Now we're looking, maybe we're starting to get a little bit of confirmation, but notice how volume is trailing off here on the 3-minute. If it trails off more, we could have entered this at a much better price. All right. This is why what I'm saying, and hopefully this isn't too much of a nuanced point here, which is end cash hasn't popped up again. Okay. And it's been probably over a minute, right? And the chart represents what we see that it hasn't popped up again, right? Because what would it take for it to pop up again? It would take for relative volume to actually beat the recent relative volume and to actually beat this volume here, right? That's not happening yet. Now there could be consolidation happening right now. I'm not saying this trade is a bad trade, but if you enter here and not waiting for confirmation of whether or not there is true volume behind this price action, then you're taking more riskier trades than you need to using an indicator like this, okay? The key is, once again, the problem is I can get into so much detail here, and I don't want to make this a long video, is these are all relative. And all this means with Knowles right now is I need to pay attention, okay? Is that right now with Knowles, I need to pay attention, and you'll see here on the 5-minute, if we look at the hour and see where we're at on the hour, right? This actually might be a good trade with Knowles, because what we're seeing here, and this is another tip I'll give, is that we're starting to see stopping volume. Stopping volume is usually good. All right, I'm taking this video in so many different directions. So on Knowles, not quite stopping volume, but there's volume, okay? So I'm going to wait on a 3-minute as well to see stopping volume. And this is actually another good example of, this isn't the best example, but once again, see how the price is still moving. There's still things happening there. So when you see something on this scanner, it doesn't mean enter the trade right away. It means wait for confirmation, because one or two things are going to happen, okay? Is that people will actually go in and support the price at the level it's at, okay? Or what will happen is it'll wake up sellers, okay? And then the sellers will wake up and it will drive the price down more and more, and you won't see it pop up again, and you're going to be in that trade for longer than you want. All right? Hopefully this isn't too much of a nuanced of a point. I'm just trying to be very clear based on kind of understanding this. The key thing to remember is that these are relative numbers that are relative to each other and relative to that chart and relative to recency. All right. If you're not sure, ask questions down below in the comments, and maybe I can expand on this, but that's key. The next tip is to be mindful of low volume charts. What do I mean by that? So let's go to QSP here. Anything below 300 to 400 in my mind is a low volume chart. Okay. And so QSP is a low volume chart of 139, and it popped up a second ago or a while ago. And you'll see here, it popped up actually in this spike, I think this spike here, probably. And what did it do since then, right? I know these charts aren't the best to look at, right? It probably popped up here. So it did rise, right? But then it went down. And if we actually go to a real chart, not a real chart, but something we can actually read easier, right? So I don't know why Binance doesn't use TraderView, or not TraderView, but doesn't use these charts. They can easily use these charts. So you'll see here, this is probably where it popped up. Now you would have had to been out of that trade pretty quick. And you probably still would have been under that because you're not looking to make 2%. You're looking to make more than that, right? So look what happened here. See how it's declined now? So obviously this looks like a okay trade because you probably would have a stop loss right around 5% probably. It's looking to make a higher highs, right? It's looking to close a little bit higher here. So this looks okay, right? But the challenge with low volume charts, okay, is that you'll see here is it takes less capital to highly manipulate those charts. And yeah, you see a couple, there's a buy wall here, 3.6, there's one here. There's, you know, a sell walls, which are sells that are basically driving this down, right? Is what it looks to be happening. Of course, you got to watch the order book to just confirm this, right? But it takes less capital to manipulate these charts. And one of the things I'll say about manipulation that I think escapes a lot of people is that the manipulation isn't simplistic. The manipulation is a couple different things, all right? There's wash trading, all right? There's that. The other manipulation is that, yeah, you'll see a 3.6 Bitcoin order here on the books, okay? But the manipulation is more subtle than that. It's smarter than that, meaning that it takes about 5 to 10 Bitcoin, if that, to manipulate this chart really easily, meaning that, and the manipulation isn't just one point of entry, right? This could be manipulation right here. All of these orders could be manipulation. They could be real as well. I'm just saying that generally the manipulation isn't just one order. That's too obvious, right? The market's getting a little bit more sophisticated. So the manipulation is starting to become more sophisticated as well. It's been like that for a while, but it's starting to become more sophisticated, where it'll be a wall that will push something down, a larger wall, right? And it'll look more nuanced, all right? In addition to wash trading, in addition to both sides manipulation, meaning that kind of like a small trading range of manipulation, the key is, once again, I'll get back to the point, is when you're using this to trade, and it's a good tool. It's a good first indicator, and it's a good confirmation indicator. But you have to be mindful of low volume charts. You have to be very mindful of. And if you're going to trade a low volume chart, what I would suggest before you trade it and enter a trade, if you've never traded that chart before, is you better look at the daily, okay? And you better look and see where you're at on the daily. I mentioned this in other videos. You better look and see where you're at overall. And if you're not trading with stop losses, once again, there's a tool down below to actually trade with stop losses. But if you're not trading with stop losses, then you better be buying at the bottom of a value range, which it appears to be right here. So this appears to be a good place, but still there's a downside of support of 35% of a strong support range, right? So on the daily, once again, I'm not even going to talk about the intraday moving end value, but the key here is that the low volume charts can be highly manipulated. The other thing I'll mention about low volume charts is that you have to understand how to read spike in volume, and you have to understand how to trade spike of volume. So here is OST, and OST is a very much spike of volume chart, what I consider a spike of volume chart. So if we go to OST, just so we can see this, and hopefully these are this isn't too much of a nuanced point, but you'll see this spike of volume, spike of volume, spike of volume, right? you'll see this a lot in crypto, but there's some charts that are more spike of volume charts. And then also on the spike of volume, you're going to have heavy rejection to the upside. And the movement upward is a slow movement upward, okay? And the foundation of what would be a support is sometimes weak, okay? I'm making a lot of points here because I'm trying to speak at a higher level, but the key here is just be mindful of low volume charts. You need to understand if you're going to trade a low volume chart, you better analyze that asset pretty closely, and you better understand how does the price move on spikes, and then how do you exit on spikes, okay? You have to exit on spikes. That's really what you're looking to do on low volume charts. So on low volume charts, you got to exit on spikes. And there's some things that here, like I think ONT is a low volume chart, or maybe it's not. I always forget which one's a low volume. So even on these higher volume charts, the other thing to look at, and I'm mixing a lot of different things here, but is that you want to get a general feel of the average order volume, the average order size per position. Okay, this isn't one person. It could be one person, but you want to understand what's the average order size per tick mark, basically, and make sure that the volume that you see and the orders on the books that you see and the orders that actually have gone through the trade history and the orders on the books and everything else matches what you would expect. Okay, I know I'm making a lot of nuanced points here, but I've got very good at using this tool as a first indicator. I've got a couple other indicators that I use in conjunction with this, but I've got very good at using this as a first indicator to scalp a lot of these trades and do trades that, let's see if I can find what I was going to share in the final tip, which was, I think it was XLM that we saw, right? So XLM. So it popped up here earlier in the video. And this is a good example of what I would consider. Now, Bitcoin, I think, just tanked. Yeah, so you'll see Bitcoin went down, 2% here. So, and we'll see here if there's actually going to be a base here built or support, and then it will trade sideways. We'll see. That could be the best case scenario. Worst case scenario here is it actually dips down here. But this isn't a Bitcoin video. But a lot of things have changed here in the since I started this video, because Bitcoin has basically tanked 2%, right? So on XVG, if we go and look at XVG, or XLM, sorry, this tool is also good for understanding stopping volume, all right? And stopping volume, for those that have been in my training, you'll know what this is, but stopping volume is basically volume that matches price action that's stopping the price from continuing downwards. And then it's like anything else in a market, it's a sponge, so it's sponging up, and it's getting ready to possibly turn. I say possibly because remember, this is an indicator. So this shows to be stopping volume at this range here, right? This candle here. Now we would have to wait on the next hour to make sure that this is confirmation of stopping volume, and it's looking good so far, right? We want this volume, we've got 20 minutes left. We want this volume to close up here, kind of in this range here. So if I put a ray there, right? A ray here, we want it to close around here, ideally, for it to be completely stopping volume and still be a red candle, right? So that might be contrary to what you're thinking, which is, well, shouldn't it be like, ideally, here's what we want to see. We want this candle to paint a little bit low to this, but then the volume to be probably up here. That's ideally what we want. That'll be stopping volume. And then we'll be looking for confirmation on the following candle. And a confirmation on the following candle would be great to see consolidation, because then this is a good longer swing trade, a good longer long-term trade. And here I am. I waited a little bit and just to see the next candle before I finish the video here. And this is a good example. This is a perfect example. Now, part of this is because Bitcoin, once again, it did do the tank that we talked about, so, or that I mentioned here. So you'll see here it went down and then it kind of stopped a little bit at this range. Remember, support and resistance is a range, right? It's like a pillow. It's like a rubber band, right? It's a range. So it's not just one hard fast number. So it's still, Bitcoin's still there's looking to be, is there going to be support built at this range, and then is it going to trade at this range and maybe gain some strength and then continue upward? That's kind of what's playing out right now. Okay. So much of the action here that you see with XLM is part of that, I think. But also, this is another, once again, why you don't enter the trade. That spike came here on this 1 hour. This looks to be stopping action. Before that looks to be stopping action, right? But look at, if we would have entered here at some point in this time, we'd be down right now, obviously. I mean, we're just down a little bit. And keep in mind, too, one of the things, I'm adding so much stuff here. Just because you enter a trade doesn't mean it's going to turn around right there, okay? So usually, most trades I enter, we're in the red first before it's green, okay? So just the way we enter trades. So that's just the way it works. But the main point here is, look what's happened now. Remember, this is the candle we were talking about. We're waiting for confirmation, right? So far, look at volume. We've got 38 minutes left. So that's about half the time frame here. Now this could pick up, right? But where do you think volume's going to end up? Is it going to be below the average that we see here? So there's the line. Is it going to be below the average? And what does that mean, right? So by just being patient and using that indicator, you'll see prices continuing down here. By just being patient and using that indicator and looking for confirmation, we didn't enter at a trade at a higher entry than we should have, right? And the other thing is, if we look here, one of the things to keep in mind is that it takes effort for price to move up and effort for price to move down. It's one of the things that there is natural gravity for price to move down, but it still takes effort. So you're looking for that effort, right? The key here is that, I guess I should just end on this point, which is, you need to not enter as soon as you see a signal, and then wait for confirmation. In the whole scheme of things, a 0.5 or 1% difference, and of course it's different per asset, right, is not going to make a huge difference on whether or not you're actually profitable. But waiting for an actual confirmation will make a huge difference on whether or not you're in a trade that you shouldn't have done. That's key. So once again, if there's any questions, if you have any questions about stuff I covered in this video, leave a comment down below. And down below, you'll find in the description, you'll find links to the Discord group, the primer document where I discuss just a primer on trading cryptos. Also, subscribe here on YouTube, and there'll be a link to various tools that I recommend and use down below as well. So that's all for this video. Hopefully it provides a little bit more insight on using the Binance Volume Monitor, and I look forward to seeing you in the next video.